And good morning to you, value investors, hype dorks, day traders, disruptors across the fruited plain. Let's see what we got in store for us this morning. I have a present for you too. All right, good morning, guys. So, yesterday was my birthday, and I asked for one specific thing, and I asked for it last week on the show. I said to Nicole that I wanted a bell for every time there was some kind of disruption in my life, something that I don't understand, whether that be innovation, anything like that. She got me a cowbell. So on the cowbell, it says, well, it's a little blurry, all of the hype stocks, hold on for dear life, disruption. What does that say? EV and weed. I wrote weed. And innovation. So, anytime we have disruption, I will alert you, unlike other channels that don't alert you when it comes to this kind of stuff. So, let me turn my mic down because it's spiking high. I got a new mic. All right, so that's it. So, there's something else I wanted to tell you too. And thanks for the birthday wishes. That's very nice of you guys. Speaking of birthday, follow me on Instagram. I'm like 6 away from 2,000, so follow me. Come on, let's do this. Anyways, let's get to it. You guys don't care about that stuff. All right. It went from not having any news this morning to a lot of news this morning. So I'm going to start with housing, and I'm just going to kind of bounce around, and then we're going to get to some other stuff. So first thing, housing prices. Housing prices rise at a record pace for fourth consecutive month, but economists aren't worried about the housing market because this time it doesn't have anything to do with housing. Home prices are virtually in every major metropolitan area have hit new record high, but economists say that the pace for the price of growth isn't inherently a cause for concern. Okay, that sounds wonderful. Let me turn up the thing on here. There we go. Okay, so the latest edition of the S&P Case-Shiller Home Pricing Index shows that home prices increased 19.7% from a year ago in July. How are we not concerned about this? Guys, thank you. I appreciate the birthday wishes. Marking the fourth consecutive month of record growth in more than 30-year history of the index. The separate 20-city index, which measures this is the one good thing that I'm noticing about this article. It's the separate 20-city index, which measures the price of appreciation among major metropolitan areas across the country, saw a 19.9% year-over-year increase. But the last several months have been extraordinary, not only in the level of price gains, but in the consistency of gains across the country. That's the one thing that... Actually, wait a second. No, that's not a good thing. Okay, so what I read this first as I had people putting in washers and dryers in my house. I read it as the gains are not consistent across the country and it's only area to area. But now that I'm reading it's everywhere. Oh, this is to me, I read this as not good. So maybe I'm a cynic, but I don't think I am. The big picture, the fast pace of growth, price appreciation in the market is now seeing It's seeing is sure to continue to draw comparisons to the housing bubble back into the mid 2000s when it burst, largely from the Great Recessions. But the analysts say that it's not due to that because from back then it was from subprime mortgage crisis where borrowers did not have the ability to pay back their loans. But now I guess people do have the ability to pay back their loans. I don't really know. Doesn't sound like it, but it's probably different this time anyways. Oil, I'm going to just hit real quick because I want you guys to be able to go in there and day trade and swing trade oil. You guys can capitalize on this stuff, I'm telling you. Oil's running at $80 a barrel. When it comes to inflation, I mean, inflation's going to affect oil. You guys can absolutely go and capitalize on this. I've said it multiple times. I think that what we're seeing right now is a very difficult market to trade from a long-term perspective, but the short term, you can definitely capitalize. What kind of watch is he wearing? Rolex Submariner with the date on it. Nice watch. Must be nice. If the Fed taper tantrum 2.0 is like the first one, prepare for months of instability. So it seemed last week that the Fed may have avoided the taper tantrum when it signaled that it was going to very slowly begin to taper, and the end of the $120 billion treasury purchases and bond and mortgage-backed security buy purchases was going to be delayed till the end of 2022. We'll see. So did this delay the taper tantrum? We started seeing it yesterday. I mean, yesterday was a big day. The NASDAQ was effectively down 3%, and it closed down 3%. That happened last week, but the NASDAQ closed down like 2.1 or 1.9%. It didn't stay around 3. So with everything that's happening out there, it's taper, it's inflation, it's China issues, we have government shutdown issues, we have debt ceiling issues. This is like the perfect storm of disaster that could be coming right in front of our faces. And is the inevitable being delayed? I don't know. But when it comes to this default thing, everyone's saying we can't default. I mean, at what point, when you do things like this that are this irresponsible, at some point, everything has to come crashing down. I've said it before, I'm going to say it again. It sucks, but it is what it is. If you don't do irresponsible things for a very long time, then you don't get in trouble you don't get in that big of trouble. Anyways, U.S. default. Where's the default? What happens if the United States defaults? We're all screwed. On September 30th, that marks the end of the federal government's fiscal year, the deadline for Congress to pass a basically to not shut the government down. So that's going to happen at midnight tomorrow, which is Thursday. The debt ceiling, which is the amount of money that lawmakers authorize to the Treasury Department to borrow, or just print it. must be suspended or raised by October 18th, according to the Treasury Secretary, Janet Yellen, the genius that she is. Or the U.S. will likely default on its debt. Guys, I said this yesterday. I'm going to say it again. They're not going to default. I think that since 1960, I should have went and double-checked this, but I didn't. I think they've raised the debt ceiling 38 times since 1960 or 33 times since 1960. They're going to raise it every single time. If you think for a damn second that, if you don't think that world leaders around the world, like in China, Japan, Europe, are calling the powers that be here in the United States, Congress and stuff, and saying, what the hell are you doing? Figure this out. If we default on our debt, this is not a United States thing. This is a global thing. And it's going to be very, very bad out there. So more like Janet Fallon. Boom. Very good, Matt. Nailed that one. All right. Tech challenge. Tech challenges. So this one I brought up because I ordered 4 of those Sonos One speakers so I could take them outside and stuff. It took 8 weeks for me to get those things. You used to be able to walk into a Best Buy and grab them any second. So the Sonos CEO says this is the most challenging time that he's seen in his 23 years in tech. The industry right now, in terms of semiconductors, port delays, container shortages, you name it. In my 23 years in tech, I have not seen such a period. The good news is that we look at 2022, I think we see more fabs coming online with the semiconductor space. The short-term issues we'll be able to work through. So while there are some delays in the near term, certainly a speed bump in the road of the supply chain and everything is what we're seeing right now. But it is crazy. I mean, geez, it was 6 weeks to get 4 speakers. I didn't really think that those things were something that special. But hey, whatever. Ford, late to the party. This story just bothered me. That's why I had to pull it up. Century-old Ford announced its single largest investment plan ever. This was the battery thing that I talked about yesterday. $11.4 billion in Tennessee and Kentucky to do batteries for their trucks, cars, etc. They want to have 40% of the cars on the road globally for Ford to come from EV by the end of 2030, 2025. I don't know. Whatever. Doesn't matter. I don't think it's feasible, but hey. And Ford may have been late to the battery party, but they're turning up the music the loudest. Makes sense. Don't tell me that this company is late to the party. You know what's late? It's not even late to the party. You know what's BS? Is those other companies like this Lucid and Neo and Nikola, and there's one EV company. It's Tesla. And if there's going to be another EV company that competes with Tesla in the immediate future, and I don't mean by 2030, it's Ford, it's GM, it's Toyota, it's car companies that are established and have money to burn and put true investments into this, not these startup things from these pimple-faced tech dorks in the middle of Silicon Valley that say that they're disruptive and go on and on from there. So this story, I'm glad that he said they're turning up the music really loud because that's exactly what they're doing, and I absolutely love it. Speaking of pimple-faced tech dorks from Silicon Valley, Lucid EV production begins. This is disruptive. Lucid EV production begins. The company says that it will start delivering cars in October. We'll see. Electric vehicle maker Lucid Group on Tuesday showed off its first car, rolling it off of its production line, and said what it will deliver it to its customers starting late next month. I wonder if when they mean rolling off its production line, I wonder if they actually put the stage on a slope and rolled it down a hill like Nikola did. Lucid says that the vehicles have a 520-mile charge, which is incredible. If that's true, that's incredible because Tesla does get to 420 miles only, but that would be pretty awesome. I mean, look at these cars, guys. I remember looking at these cars in 2018 and saying, these cars are awesome. So I hope that Lucid does it, but hey, we're going to see. Lucid is going to kick ass. I don't think that's true, but whatever you like to say. Speaking of Tesla, didn't I have a Tesla story here? Yeah, lithium. Yeah, this is it. I pulled this up because they bought a lithium miner. Guys, go and do this. Go and trade this lithium stuff. This is amazing. Lucid and Rivian both made one car last week. Woohoo. This is epic. Yeah. All right. Here it is. Crypto decoded. Where's my crypto one? Oh, I have Bitcoin there and disruption of hold on for dear life, baby. All right. Tesla CEO Musk says the United States government should avoid regulating crypto. Of course he wants that, because half of his demographic is people that made money on crypto and want to go and buy his damn cars. They're going to regulate it. I'm not even going to read this story. I didn't read this story this morning. I'm not going to read this story. Will Lucid even be able to produce the cars? Of course they're going to produce the cars, but they're going to do it like they're going to produce the cars like it's like I'm producing cars, and they're not going to deliver a lot of cars. If you the cars, where was that story at? $169,000 for one of these things. They don't even have showrooms. If you know how you know you have FU money is if you go out there and buy a $169,000 car. Muhammad, type mo 4,000 times one more time and see what happens. If you go out and buy a $169,000 car, then and without seeing it, that good for you. I mean, you made it. You definitely made it. All right, guys, that's that. So let's see what the market's doing. Stocks are up. Shocker. Let's see what the yields are doing. This is for PP. Oh, the 10-year popped over 1.54%. That's interesting. Let's keep a watch on that one. Nothing reports today. Let's see tomorrow. Bed Bath & Beyond reports tomorrow. Nothing really on Friday. This story I'm going to do tomorrow. Dalio versus Soros. That one's an interesting one. But let's do this one right here. So, guys, end of the month is coming. Prices are going up from everythingmoney.com. But remember, if you buy now, you're locked into these prices. $7 a month gets you Discord access. Over, I think it's like 6,500 people right now. If you want access to our software and Discord, $27 a month gets you that. This is going to $28. $77 a month right now. This is going up to $78 October 1st. But this gets you access to me, the Employed Trader series, all of my training videos that I give you, all of my seminars that I give you. I think I'm going to look at my schedule. I might do a seminar, like a Q&A on this Friday, but I'm not sure. It might be next Friday. I just have to see what I have going on in the afternoon. But I'm going to do, I love doing private seminars for you guys, and I haven't done one for probably about 6 weeks, so I'm going to do one. If you want to do Paul's Super Shorts on a monthly basis, $500 a month gets you into that tier. There's about 45 people in there. If you want to do a one-on-one session with me, $750, 1 hour session with me, and I'll ring the cowbell for you. It'll be a personalized ring, and who wouldn't want that? And if you want a $10,000 real estate deal with Paul, that is for 4 hours of his time analyzing a real estate deal. And like I say every day, it's probably a good thing to go there if you are doing some kind of deal. Guys, follow me on Instagram. What are we at? I'm an Instagram whore. What are we at here? Instagram is disruptive too. Whatever. All right, so let's do some stuff. Send me some stocks. Let's get at it, and we will go from there. 1,994. I need 6 more. Follow me on Instagram. All right, let's do this. Let's do some stocks. Let's see. Why don't we look at, the first one I want to look at is Nike. So Nike, the reason I wanted to look at this is because I really liked that this gap that happened and did fill, and it filled right down to the 200-day moving average. Wait a second. Why is that? Hold on. This is a 2. We need this to be daily. There we go. What I really liked is that this thing moved right down to its 200-day moving average, filled the gap, and by gap, I mean right there. It filled it yesterday. So came down, filled my gap. This one, it's going to probably pop back up there and fill the gap to the top side, but this was a great looking short. If you're still short on it, make sure you get enough selling volume to get through the 200-day moving average, and you'll be fine. You're still fine here, but one thing I don't like is that your red and yellow line are converging. They're getting rather close to each other, a little too close for comfort. So, Nicole, can we get Mo a sarcasm whistle next? I like that. Oh, Enrique, good question. Trapdoor. So what the trapdoor is I'm going to show you right over here. Let me slide the screen just so you can see it a little bit better. All right, so here's the trapdoor. When you have a stock that is your red line's running up like this, your yellow line's running up like this, and this is an even better example. So when you want to go long on a stock, your red line is coming down, it's under yellow, your yellow line is coming down. When these things start to roll over like so, and I'm going to use blue here, when you start to get the red line starting to creep up towards the yellow, looks like it's going to do a reversal on you, and the red line is going to cross through yellow because we need to go long, we need red line over yellow. What we need is that convergence of the trapdoor to close. So as soon as the red line crosses over the yellow line, that is called the trapdoor. And the trapdoor, if that doesn't close, this thing is just going to go sideways and you're going to probably keep dropping in price. So to get confidence in a stock, you need the trapdoor to close, meaning the red line crosses over the yellow, or vice versa if you're going short on a stock. Next, somebody said PBR. I would like to do that one for them. PBR. All right. So with PBR, I will say I do not like what's happening here. It's just so the good thing is if you just start drawing lines, we can see that we are getting lower highs. So we are getting these, we're really not. I don't like this. So what I was trying to do, guys, let me pull up a line chart and just show you what I was doing. And this is this probably won't make a lot of sense for those who are not experienced, but what I like to see when I'm shorting a stock is what are called lower highs. So just like when we're going long on a stock, I like to see W formations of higher lows. So here's a low. And then this low right here on the right side is higher than this previous low, and so on and so forth. The opposite happens when you're shorting. You want lower highs. So you want to make these M formations going down. And this is the letter M. Here's your previous high. This is your next low on going down, but it's it's lower than the left side. So you just want to keep seeing these M formations going down versus the W formations going up. Right now, I'm not seeing that here. I'm seeing this side is higher than here. I don't like that. This right here is higher than last week's M formations. I don't like that. So this is not an ideal stock for me, just because I'm seeing a pattern that is all over the board, and why give yourself the headache of trying to do something with that? Let's see. Don't forget to talk about the oil stocks. All right, let's talk about some oil. What's the oil ETF? I have no idea for the S&P. I'm just going to start typing in like Occidental. Let's see what Occidental's doing. So Occidental's looking really good right now. If you get an engulfing candlestick, go ahead and grab it. Just be careful. If you're swing trading it, that's the opposite. Let's do RDS.A. This is Shell. What the hell is this? All right, if you're in these things, take profits on them. What did BP do? Damn. So these things are going to pull back, and you can already see it. Pre-market, they've pulled back. So this is where it closed the day yesterday, and it's going to open the day at $27. So, damn. I thought these things were really going to go. Give me another one. XLE, thank you very much. XLE is energy. Thank you, Mark. Yep, looks exactly the same. They all look exactly the same. They are just starting to trickle up. Looks like they're daily stochastics rolling over because they ran out of steam, because they completely flagpolled, and then the flagpole is going to come straight back down, and you're going to get back into this consolidation area on the ETF of $50. So that's no bueno. All right, let's look at Ford, since we talked about it this morning. Oh, let me pull up my lines. Here. It's not the worst flagpole in the world, but it's flagpole-ish, because you did have that run up. This was your little baby blip of kind of W formation, but not really. But I'm sure this thing is going to pull back down to $13.50 at some point this week or next. So that's not good. God, this market is just so unbelievable. Just like that Sonos CEO said that this has been the most difficult market he's seen, difficult time in tech that he's seen. This is the most difficult trading long-term market that I have seen in my 19 years of doing this. All right, let's look at Sonos. Great product, I'll tell you that. Wait, I typed it in wrong. Is it SONO? SONO. Yeah. All right. So Sonos downtrend, absolutely a downtrend. And a dip below, yesterday, a dip below its 200-day moving average. Now you can see that pre-market, it's about to open up really on its 200-day moving average. So be very careful with that. Let this trade come to you. What you're going to want to do is make sure you get down here today and stay below the 200-day moving average. These moving averages are very important, and you need to stay on them like flies on you know what. Next, Facebook. More like fake book. Good looking downtrend. Even down here, it looks like it's rolling. But guys, this is where hedge funds make their decisions, right at the 100-day moving average. Like I've said before, you're in a consolidation area, and this is where the big institutions, big hedge funds decide, are they going to go long on this thing or are they going to go short on it? And man, yeah. Be careful. Wait until it gets through. Bang & Olufsen. I do like Bang & Olufsen. They do make really good speakers. Just blame retail investors for issues trading. Yeah, I don't think that that's necessarily the case because I'm not in the camp that says retail investors can control this entire market. It's just not. I just don't believe it. So, yeah. Let's see. All right, Apple. Reed needs to be coddled on Apple. Listen, this thing turned on us and it went down, and it is what it is. You're going to lose on some. And this was one that we lost on and followed the rules. They didn't turn out, and it is what it is. So Apple will eventually consolidate. I do think it'll come down here into this 100-day, 200-day moving average range, and then this thing will bounce back up and we'll ride it back up probably into this 145 to 150 area. I'm not worried about it. I do not think that. Hey, sometimes you win, sometimes you lose. Cost. What's going to happen to commercial real estate? As far as commercial real estate, in my opinion, I don't think you might see a blip, but everything is going to cycle back and it's going to be perfectly fine. But you could see some hardships just depending on what companies do. But in my opinion, what I think is going to happen is I think people are going to, all of this work from home stuff, it's going to get to the point where in the next 3 to 4 or 5 years that there's going to be so many commercial properties out there that, and maybe I think people are going to start seeing less efficiency from work from home because it's going to become maybe the new norm for a bigger percentage of people than obviously was pre-pandemic. And commercial real estate and rental properties and whatnot are going to be so damn cheap that big businesses are going to buy them, and they're going to say, you're coming back to work. And you're going to come back to the office, and it's so cheap for us to pull you back into the office because buying properties and renting properties is so cheap. So Costco. So if you're in Costco, take profits on this thing. You tried to break out through an all-time high yesterday, which is surprising because that was relative strength. And you're starting to see a little dip. This doesn't mean exit the stock. It doesn't mean sell it. It just means take your profits off the table, especially if you have caught this entire run. Please take your profits off the table, and that was a good looking thing. So USA says Chinese government blocking Boeing plane purchases. I never know. What's the value of %K and length in the smoothing? Salah, it is 19 on the weekly chart. It's 19.44, and on the daily chart, it's 10.33. Rolls-Royce, please. SWBI. All right, let's look at Rolls-Royce. Rolls-Royce Holdings, over the counter. Boom. Okay. I don't know what to tell you here. Is this the right thing? So give me the ticker symbol, please. I just want to make sure before I waste my time doing something like that. SWBI. Let's see. SWBI. Consolidating. It's just literally all it's doing is just consolidating here in this support level right at the 200-day moving average. Nothing really going on here. But from a swing trading perspective, you're starting to get that rollover right there. So just be careful with this one and go forth. Penny stocks. I don't typically like penny stocks, but over the counter doesn't necessarily mean penny stocks. It does on a broad scale, but there are companies that go over there and they're technically, to me, I look at anything that's under $5 a penny stock. Even if it's in the S&P or something. Is in California, he will make affordable housing for homeless shelters. That's a good idea. I really do think that that's probably a really good idea. Path, let's look. Okay, I don't trade these kind of things because they're too new. RYCEY. Okay, so that was it. All right. Well, if you're on this thing, take your profits because this thing just ran up and this is your ideal flagpole pattern and you've gotten extremely lucky. This thing is coming straight back down. I'm telling you, it's coming back down to $1.60, if not lower. So go ahead and take your profits off the table there and you are going to be a very happy camper in a few days when the rest of the hype dorks lose money on it. HPQ. Let's see HPQ. I bought this thing a long time ago. I think I sold it at 22 or 23. Value play. So we're just coasting on the bottom, as you can see. And right now you're excuse me. You're starting to do a little roll over here because you're stuck at all 4 major moving averages right there. So be careful with this one. Not a big fan. I think and right now it's opening at $27.31. So that's a pretty big pre-market drop that you're going to see. All right, what do you guys got? What do you guys got next? Let's see here. What do you guys have next? Palantir. All right, let's do this damn company. PLTR. Palantir. It's crossed. It's not a short yet, but it's getting to be a short. We had a great engulfing candlestick yesterday. I love to see that. If you can get one more today, I bet this thing falls into the sweet spot down here, but I would probably let the yellow line get down here as well. But from a swing trading perspective, this looks really good. The only issue that I see is you're going to have to get through these 3 moving averages, 100, 200, and 50. I just don't like that. I don't like that on a company like this. That's my issue, where a lot of these hype dorks can flip the switch on this thing like nobody's business just because they think that it's disruptive that day. All right, next, let's see Carnival. So Carnival's a 50%er, but the trend is starting. I mean, the trend is looking okay. I don't love how we're kind of coasting sideways here, rolling over here. To me, I think we have a little bit of a flagpole here. I think it's going to pull back down to probably the 100, 200-day moving average. So just be careful with that one. I would probably take my profits if you were in it for a longer term trade. Intel. Let's see what Intel's doing. Intel's just consolidating. It was starting to get turned up a little bit here, but as you can see, and the market's now open, as you can see, well, it's not bad. The stochastic corrected itself right there. Let this yellow line get into the sweet spot with it. And that is exactly what would happen. What do I think about the debt ceiling? Debt ceiling is going to be raised. That's what I think about it. Should they raise it? Absolutely not. Will they raise it? Absolutely. And those in charge are morons and scam artists. And Janet Yellen, the best joke I've heard all day, and I'm probably going to hear all day, was Janet Yellen, more like Janet Fallon. So, boom. Last one I will do for you guys. I'll do 2 more. What the hell? NRZ from my dude Coco. So Coco, short on this side. I love it. This is such a great looking stochastic. Let me zoom in here because we want to really see that thing. All right. This is such a great looking downtrend stochastic. Good volume coming in. If you get an engulfing candlestick and you blow through this 25-day moving average, you got a great looking short down to the 100-day moving average. But from a long-term perspective, don't be in this thing long or short from a long-term perspective. All right, let's do Peloton. Peloton dropped 4% yesterday, I think. Okay, let's see. Peloton. So Peloton's a short, absolutely, from a long-term perspective. Now, I think if I was you, I would throw a tracker share on this to go long. Am I looking at the right Peloton? Yeah. Am I? Wait a second here. How much is Peloton per share now? Give me a second. Peloton. Wow. Okay. I didn't realize the Peloton was $88 a share now. I mean, it was $171 recently. Jeez. All right. Well, I'm like speechless right now. Okay, I'm going to look at Peloton from a value perspective. I know it's not a typical company that I do, but hey, Timo, what's going on? So here's what I would do. Tracker share right here and let this thing get turned up, because this to me right here is looking a lot like it did right back here in the middle of September, where you can grab it and get a pretty nice run on it. You had a really nice 2-day run on here. So this thing has been beaten down hardcore. Let this thing turn up, get into the sweet spot, make a great move to the top side. You're going to have a lot of volume to blow through these moving averages, but this is Tracker Share City. I think it will behoove you to do such a thing. All right, guys, that's it for today. Yeah, great show. I will see you guys in 23 and a half hours tomorrow morning right here. Go make disruption, and I'll see you all. I'll catch you on the flippity flop.
Thank you.